I bought Laco because they're clearly the management was ethical. They're charging a 1% management fee. They do have a history of selling assets if they thought they were expensive. They are very aligned with shareholders in the fact that they own a majority of the stock, not getting egregious salaries. And most of the family, the Hathaway family, that's not in management, they pay their bills with the distribution. So they have every incentive to make good investments and keep that distribution going up. So I like being, partnered with that family. And then, of course, you're buying the real estate at 50 cents on the dollar at the time. And now there is a catalyst where there's been some news reports that that Storage West might be getting sold. Which, if it does, I mean, that would be one of these years where it's possible you get 100% dividend, even at the current price. I mean, the stock's up a lot in the last month after that news report. But there's just figuring out my calculations. I mean, even right now they're trading about an eight cap versus recent transactions that have gone for there was a recent acquisition with another similar self-storage company, and those self-storage units went for a 3 cap. So either way, you're still getting a huge discount to the private market value. And I think in a sale, I think total with the athletic club combined, you're getting, say on the low end $7,000, on the high end $10,000 a unit on a $4,000 a unit stock price. So it could be a special situation that I just don't like to bank on that actually happening. So, it's likely if that doesn't happen, the stock will go down from 4,000 a little bit. But if it does happen, I think you get a lot more than 4,000. And then looking at, say, like Brookfield Asset Management, right? I mean, they have an asset management business, which I would put on some kind of higher multiple, and then you just add up all the limited partnerships that they own and all the other private funds they own, and add the two together, and you get a market price for that. So I was paying, maybe 70 cents on the dollar for a company that's been growing double digits for 20 years plus under Bruce Flatt, who's one of the best real estate investors in the world. So that's a company where I'm willing to pay a little bit closer. I would honestly pay what I think is fair value for the company and hold it for 20 years, and I think you would do very well.
So how do you go about assessing management? What are some things that beginner/intermediate level people could look at to really give them a sense of what you're talking about with management?
Yeah, sure. So with a real estate company, have they done positive things for shareholders, right? I mean, typically if you look at a stock chart and the thing's flat for 30 years, it's probably not a good management team. So, what do their salaries look like? What are they being paid to manage this real estate essentially? Are their incentives aligned, right? Do they have a history of good capital allocation? I mean, that's a big one, right? Because some of these companies, again, might just be in it to grow at whatever price possible just so they can make more money on the managerial end, saying, well, we own $1 billion in assets now. Have they bought back stock when they thought the stock was cheap? Have they sold stock at opportune times to buy, cheaper real estate? How, for more stable REITs, has the distribution, has the dividend been going up over time? If you look at the partnerships under Brookfield, right, they say, here's what we sort of target. Here's the history of distribution growth. It's pretty consistent growth, right? Management's very aligned with shareholders. I would say study Brookfield, read the Brookfield shareholder letters from Brookfield Asset Management, but then also read the partnership shareholder letters from the individual public partnerships. And, you could see they're very, very, very shareholder aligned at those companies, and they really understand value. And, and Brookfield owns a big chunk of those partnerships too. So if they go down, Brookfield, we get hurt with them.
Yeah, those are good insights. So I guess thinking along those lines, that management across different sectors are different, or are these things that we're talking about REITs? If you transfer these ideas to tech or to energy, are we looking at the same things?
I mean, there's similar principles. I mean, the thing is like a dishonest management team in a REIT is really scary. You need to trust management a lot more, I think, when you're coming down, when you're looking at real estate. The other thing that definitely translates is, the whole concept of empire building. So there's a real incentive to empire build if you're owning real estate, right? Especially in this interest rate environment, right? I could just raise assets and buy things and make a 6-7% return. Sell a lot of stock, grow a company. People are fine with it because it's better than making 2% or 3% somewhere else. So there's a lot of people getting rich, executives getting very, very rich, and the shareholders are not. They're getting bond-like returns over decades, while the executives make millions. It's pretty disgusting. So there's some incentives, and there's some overlap there. Certainly, different industries, it's easier to get away with certain things. I think like other industries that are notorious that you have to really watch out for is like mining, oil and gas. Mining tends to even be worse than oil and gas. You just have a lot of these like some crazy stuff I've seen over the years. Lying about reserves, or you do like one little drill and you say, oh, there's some gold here, and then you raise a bunch of money and turns out that's the only pot with some like gold specks. And I've seen I've seen companies hire scientists to fudge, mineral deposit numbers, or it's insane. And some of these guys, they go from like mining company to mining company and do like their little scams, and I don't get away with it. So yeah, I mean, certainly I think commodities in general you have to be careful with. But yeah, every industry is going to have their own dynamics. But what you could almost say, well, what does it mean to have ethical management, right? Have they over time been consistent what they said they were going to do? Have they under promised and over delivered? Or do they over promise and then have excuses about the weather of why they don't deliver? So there's all these nuances where I think sometimes you read enough of these old conference call transcripts, investor presentations, talk to enough people. There's a lot of nuances too that you start to see in specific situations. It's just so hard to give you these like overarching principles, because they are going to be applied so differently in different companies and industries.